Good morning, everyone. How are you doing, guys? How's everyone doing today? Are you guys okay? Ready to start navigating through the markets? I had some inquiries yesterday that people, they couldn't see quite well the candles, so I tried to change them and play a little bit around with the things, so to ensure that everyone can see it. So, is anyone trading something for now? Do you guys hold any trades? Yesterday, the Fed reported interest rates in the US. And of course, the market reacted in a way they appreciate the US dollar. To be honest, for those who may wonder, the indicators I use, I have the MACD at the bottom. The default settings, I have the 20-period moving average shown here, and yeah, pretty much that's it. And the ATR, we use it when we enter trades to measure the average range of the price, so we know how many pips to set up the stop loss and take profit, etc. Someone says, hey, ready for course. Somebody said, I'm just pants buying. Faye said, every day waiting for that, lol. Okay, Faye, that's good. So this is the Australian dollar against the US dollar. Now, what's the significance with this one? The Australian, in Australia, actually, not the Australian, in Australia, all the fundamentals, they came negative, and in the meantime, the market, since I think that was on Tuesday, right? Let me check. Yep. From Tuesday onward, the market started moving lower. So depreciates the Australian dollar. Now, yesterday, optimists appear in the Fed's statements in the FOMC press conference, and they stated that they are going to be able to control the inflation and they're going to do stuff and blah blah blah. So the markets, they just moved in favor of the greenback. So technically speaking, it's worth understanding this price formation, guys. What is this all about? The price from this point to that point created a new high, and that was the reference low. And after some time, price didn't manage to move higher and retrace 100% its move. So when the buyers, they stepped in and pushed the price from point A to point B, and pretty much with pretty much the sellers, they come afterwards and they push the price from point B back to point A. This tells us that the market is not strong and favors the buyers. Therefore, we expect more weakness. Now, as we define this as the support, that we grab it from the monthly charts, that was the previous month's low. we do expect it that if the price decline, will first come to visit this support. So price created this formation. And here is what you have to understand, guys, as retail traders. So as retail traders, you need to have in mind that when you are about to trade a trend, for example, so the first thing you must understand is that you need 4 points to draw any line. So to define a trend, you need this kind of structure, lower highs and lower lows. Now, technically speaking, we need a break below this area here to confirm that the market is in a downtrend and try to get some trades and push all the way to this S2 support. That's around 0.6425 area. Okay, is that clear? So at this point where the price currently is, we have to be a bit patient. And of course, if you go to the lower time frames, let's say on 30-minute chart, you're going to see that the market is moving to the downside, and we do expect it that definitely will retest this low point there. All right, any questions so far on this one, guys? Next one, Euro US dollar. What's going on with the Euro US dollar? Well, the price on the Euro US dollar again moved in that way, and now it declines. We expected that the market will move all the way down to retest this one. We can go on the lower time frames and capitalize on that, but remember, all the time we need to have some kind of basic understanding, structure, market identification, and we take this from the higher time frames, of course. Some people, they like to use the 4-hour time frames. I prefer the daily because it's the higher the time frame, the better, let's say, or the less noise in the chart. Regarding the Great British Pound and the US dollar, we said that we really want the price to break outside of this support zone. It's been 1, 2, 3, 4 times this support been tested. The good thing is that we didn't see any strong push to the upside, consolidation around here. So let's see if the sellers will take control and they push the price beneath this one here and move under. Now, today the Bank of England will report interest rates. Therefore, it's going to be a bit tricky with these two. Strong US dollar. If the Great British Pound will come out strong, then it's a bit hard to bet on the strength of two currencies. In my opinion, based on currency correlation study, I will go to sell the Aussie and buy the pound rather than to sell the pound against the US dollar, because both pound and US dollar are strong. Next one, USD CAD. Price, it's not at an area of support, so I'm not interested to do something with this one. Bullish engulfing here, definitely. If you go on the lower time frames, here you identify that the market make these higher highs. So let's see what's going to happen. USD yen, that's an interesting one. The Japanese yen is fairly strong, guys, so it's a little bit tricky to trade the USD yen because you're going to put two currencies that there are both strong currencies together. The outcome is not going to be that simple. So it's easier to trade, let's say, the Japanese yen as a strong currency, so to sell it against the Australian dollar, to sell it against the euro, perhaps the Swissy. And here is the euro JPY. Price made this higher high, higher low. Now it takes the swing high from the market. So we're going to definitely look for short opportunities if the market structure maintains and it doesn't change any direction. So guys, please let me know any questions, any observations. Please use the comment section to write anything you might need to you might want to ask. Great British Pound against the Japanese yen. Everything started from the weekly chart, if you prefer. Here is the weekly. We commented at the beginning of the week that this doji candle at resistance accompanied with bearish divergence on the MACD and a double top. On the weekly chart, it's one of the highest probability trades we could use. Okay, and yeah, on any lower time frame, you could take trades here, and it offered very, very good opportunities, even on the 30-minute chart. Again, early this morning on the 30-minute chart. Yesterday, sorry, not yesterday. Yesterday was here. That was on Monday or Tuesday. Here on Tuesday, break, retest, move to the downside. Yesterday we commented that finally we are having a break below this this swing in the market, and hopefully we will see some directional move to the downside. And here is the most important part for you guys. You have to understand, really understand, that you, myself, most of us, we are retail traders in the market. And as retail traders, we are not the creators of these moves. All right, we always, like this one here, we are not the creators of these moves. To identify them after a consolidation, it's kind of unexisting. A consolidation will occur and we don't know which price action will cause the price to decline. So what can we do though? First is not to get panic and to get anxiety that we desperately missed out of opportunity. We didn't miss out of anything. Okay, we understand, or we have to understand, that the market is hopefully going to continue declines, and sellers are in control, as you guys see here. After the buyers will take over, we want to see a kind of retracement with small price action, some inside candles, or even if the buyers, they're going to step in aggressively, we want to see a broken support to act as resistance, and we want to see sellers to come in force, in momentum at this level. Now, how can we be sure that sellers will be here? Well, we will never be sure in trading, first thing. And second thing, we're gonna go to the lower time frames, like 30 minutes, 15-minute charts, 1 hour, 4 hour, anywhere. And we can try to use some techniques like price action. That's the one thing, reversal price action. The second, some people, they like to use the volume profile. Some other people maybe use the, I don't know, the bookmap charting tools, and they can see the order flow in the market. Some other people, they want to use the swings and see, let's say, a break of structure and all this stuff. So there are different ways to enter the market. The most important thing is to understand what we are looking for. We are looking to sell because of this and this reason. Okay. Last few days, I was telling you about the Australian dollar, Canadian dollar, and the New Zealand CAD, that we are looking to sell these two because of Canadian dollar strength and the Aussie and Kiwi weakness. We see a well-defined downtrend here. After the break of this one, we said, yes, we want to be a buyers around this broken support, and price gave us good entries here. Other people, they might took the breakout of this kind of inside candle. We're going to count them as an inside because it gapped down and on Monday during the open, but price solid moves to the downside, and that's all what we want to see. So this is the S1 support. So there is still room for the price. Remember, guys, on the lower time frame, price always swings. It makes highs, it makes lows. So making lows and highs, it gives us the opportunity to trade. Now, Janice asked about volume profile. Yes, sure. Regarding volume profile, guys, because I'm using TradingView and I don't use any paid indicator here, I like to use the volume profile on the intraday chart, let's say on the 30-minute. What's this one? On the 30-minute time frame, and the reason for that is, in my opinion, in my expertise, it's more relevant for entries optimization. Okay, so at this point here, again, based on the indicator that I found on TradingView, the point of control, majority of trading activity traded around this level. We are on the Australian dollar, Canadian dollar. Yesterday, I had an entry. It was around here. I entered and my stop loss was above there to get filled in the move to the downside. And I got stopped out by 2 or 1 pip here on the spread before the market continued, but that's okay. It's part of trading. I like to show more the losing trades I take rather than the winning trades, because from the winning trades you cannot learn anything. I don't know if you agree with that, but from trades that we take and we experience losses, that's when it comes the understanding. Okay. So next, so Next one, New Zealand Canadian dollar. On the daily chart, price consolidated, break below this support, and retraced back to the resistance, sold off, and decline again from the 20-period moving average. We do expect a nice breakout if the price will decline. Why I say a nice breakout? Because the market accumulate here, and a break to the downside will come with momentum. Guys, any other currency pair you would like to see? Gold on the daily chart, we had this resistance here, that was from this high, that was from this high here. The market is respecting this resistance, is trying to push a bit upwards, as you can see from the candles, but nothing very relevant. WTI, bearish engulfing yesterday. Let's see if price will decline a little bit. I do expect it, let's say that was the beginning. I do expect the price to decline somewhere in this area here, to be honest. That's the 61.8. That's the fifth box. Yep. That's the area of 0.5 and 61.8. Maybe we'll see the price to visit down there. And what's going on now with the German 40 on the daily chart? If you're gonna, guys, trade this on the intraday for the London Open, here it's the double top with bearish divergence. Again, an attempt for the price to come and visit here. Bearish divergence continues. Price can support it above the 20-period moving average or at the 20-period moving average. Therefore, we have to give some credit to the market, of course. Now, if you're going to trade intraday, definitely a break above the high here or below there will give, let's say, some good opportunities. On this 30-minute time frame, the market, the hourly time frame, it's going to be very similar, because it's only two candles that they created, and the high it's up there, the low it's still there. So we have this kind of pattern. It's not a double top, it's not a double bottom. A double bottom will occur only if a break of this R1, let's say, occur above this point here. So for now on, we are still treated as a normal swing. Okay. Guys, I think that's all from me today. Euro CAD on the 30-minute chart, price is trading below that monthly area. It's right at the point of control here, where a lot of activity take place. So for me, I don't like the fact that the price didn't really push to the downside. A break below a strong support has to combine with heavy trading activity, and we see it on the candles. Here there are two candles actually, they stay as doji under the support. For me now, I want to see a break below here to continue shorting this until this monthly support down there. Pound CAD is nothing. Euro Aus, Euro Australian dollar, it was let's say good, but not that clear. We identify that from this support to this high. the market retraced somewhere within this Fibonacci area and it took over. So pound, euro, New Zealand, nothing. Pound, Australian dollar, this resistance here didn't hold, and the price is trading now above the resistance. Let's see if it's going to end up being a support. Again, fundamentally, pound is strong, Australian dollar is weak, so we might going to see some directional move to the upside. Guys, that's all from me today. I hope you find value on this webinar. Please make sure you like, subscribe the videos. For those who are watching us through the trading live, it will be a good if you keep some ratings here. You can, I think you can, somewhere here, you can leave a testimonial, something like this. We are here every single day. We try to serve you as best as possible here at MarketMinds Mastery. So we appreciate if we're going to have some kind feedback from you. So I wish everyone to have a fantastic, not only trading day, but a nice day ahead. Enjoy whatever you're going to do. And we will be here again tomorrow at the same time to continue. Thank you very much, guys, and bye for now.